Morning, Mr. Tulsian. Thomas Cook had a 15% move on Friday, and it's in your multi-bagger list this morning.
Yes, Udyan. In fact, if you see the pledge, having created by the parent Thomas Cook UK in favor of the Royal Bank of Scotland, in fact, that led, first the confusion that and it resulted into the share fall, hitting its 52-week low close to about 32 rupees 50 paise. But since then, it has been seen that this could just be a trigger for the stake sale by the parent in the Indian arm. Now, if you come on the Indian arm business, I think the integrated travel group company, also dealing in the forex dealings. In fact, they have a very robust business model. They have about 180 of their own branches in 72 cities. And first, let me come on the real estate. If you see the balance sheet on the consolidated basis, I am including the 100% subsidiary Travel Corporation of India, which is 100% subsidiary of Thomas Cook. And if you see the real estates, held by the company on a consolidated basis, book value is about 50 crore, and the present market value of that is estimated to be at about 400 crore. So if you see the earning, now you come on the earning part for 9 months of the current year, they have posted top line of 275 crore with EPS of close to about 2 rupees 40 paise. That means for calendar year 11, they will be having a EPS of 3 rupees 20 paise, 3 rupees 30 paise. And it now looks almost as certain that Royal Bank of Scotland, since they have given the facility to the parent in UK, they have taken this as a pledge, maybe with an intent that promoters will be exiting from the Indian business, and if they do so, in my view, they can fetch a valuations of as high as 75 rupees, 75 to 80 rupees. And since the 77% stake is probably going to put on the block, the open offer of 26% can all lead to very good value unlocking. And with the informations, which are all gathered, that probably the Mercury Travels, Cox and Kings, and one or two global players, they are all, or even the TravelX, even they are all, eyeing the stake in the company. And I am in fact taking a valuation call of anywhere between 75 to 80, because if you see the present market cap of 800 crore and the debt-free status of the company, I don't think that one can, one will give a valuation of less than 75 rupees per share, because the share is on an earning basis also ruling at a P multiple of 10, while Cox and Kings is ruling at a P multiple of 20. So I am expecting that price can move to 60 rupees in next 6 months. And otherwise also, if you remain invested in the company, I think it's a very attractive price to buy the stock now at the current level.
We had a big move in Tata Steel on Friday, up to 415, 416. Would you buy it here, Mr. Tulsian?
Yes, Udyan. In fact, Tata Steel now, in fact, all the ferrous metal stocks looks to have, bottomed out, considering the improvement in the iron ore front and even the price stability and all that. So probably Steel Authority, Tata Steel and JSW Steel, all three are looking good. In fact, I was little circumspect on all these stocks maybe a month back, because the situation, was not very clear. But if you go by the present scenario and if you see the offtake happening, it seems that even Tata Steel, which was heavily short, the counter was heavily short, seeing the short covering as well as seeing the fresh buying as well. So definitely I'll go for buying the stock at the current level.
The one you've picked for buying though is Sterlite, Mr. Tulsian.
Mitali, again a very interesting play, an integrated non-ferrous metal play. If you see, 65% stake of the Hindustan Zinc is held by this company, 51% in Balco, 29.5% in Vedanta Aluminium, and the talk, now going on that government has, is willing to, share their 49% stake in Balco in favor of the company, that is the Sterlite Industries, and Sterlite Industries can become 100% owner of the Balco. And the kind of valuations, which is talked for that 49% stake of Balco is anywhere close to about 2,800 to 3,300 crore. So if you take all these into consideration, just to give an example, first, straightway on the market capitalization of the company is close to about 35,000 crore, and 65% of the stake held by the company in Hindustan Zinc is having a market value of about 35,000 crore. I don't think that this can really be termed as an investment, can be given an investment value, because the results of Hindustan Zinc is getting consolidated. Now you come on the financial performance of the company, top line of close to about $8 billion, considering the first half results, and EPS of close to about 16-17 rupees. That means share is ruling at a P multiple of 6. I don't think that this kind of valuations have ever been given even to the pure ferrous or non-ferrous metal, because non-ferrous metal stocks have always carried a higher P multiple of by about 200 basis points than what it is given to the stocks like JSW JSW Steel, Tata Steel. So traditionally they have all been ruling at a P multiple of 9 to 10. So in my view, even this should rule at those levels. And even the financial position of the company is not very bad. They have a net debt of about 5,000 crore, and considering the cash flow earned by the company every year and the plans ahead, I think stock again looks to have bottomed out at 102, 103. If somebody can keep a view of about 12 months, they can see a price of 150.